Hey, what's going on, family? Today we're going to talk about DraftKings. It's been a while since I did a price prediction. I mean, it go all the way back to mid-March. Here it is, mid-April, towards the ending of April. So I said, let me come in and do another price prediction for the individuals in our community that likes DraftKings. So here we go. Now, this article was written from Business Insider. DraftKings stock has upside to street estimates. Analyst says sports betting play will benefit from healthy growth. They want more people to bet. They want more people to gamble. Did you guys hear about that NFL player that got banned for life from the NBA from him rigging some of the bets that he was trying to do on the teams that he played for? I think it was with Toronto Raptors. But again, if sports betting is going to get better or increase, then that means that more people are gambling. So I don't know how you feel about gambling, but apparently Wall Street wants more people to bet, and if they want to see the value of DraftKings go up, it's just that simple. I mean, the market's currently trading at $41.33. Take a look. DraftKings has a new bull on Wall Street that's taken notice of the growing total addressable market size of the sports betting sector. The analyst works for Goldman Sachs. His name is Ben Miller. He initiated coverage on DraftKings with a buy rating of $60. So yeah, you can definitely make some bread of DraftKings running to 60 from 41.33. Now that may be a 12-month target though. Strong unit economics and growing profitability for DraftKings are among the highlights Miller covered in a note. Quote, we expect DraftKings to compound revenue at 20% plus as it continues to benefit from healthy growth in existing states, as well as future state legalizations across OSB and iGaming. The Boston-based company could have upside to street revenue and EBITDA targets as units economics improve. Quote, we see upside to street revenue as estimates appear to be pricing in conservatism around some combination of existing state GGR, don't know what that is, as percent of PCE, don't know what that is, new state launches across OSB and iGaming and or DraftKings market share position. Okay. DraftKings growing revenue. If they have growing revenue, then that means that more and more people are trying to get their bets on for these games. If that continues, if that's the only source of revenue that DraftKings has is betting on sports, events, and games, how does he forecast that they're going to do 20% plus by 2026? DraftKings shares are up around 65% over the last 9 months. 65%. How high you think it's going to go before the market begins to go back down? Here go the risk. The risks for DraftKings thesis include potential slower than anticipated new state launches that they do not control. So if it takes longer for more and more states to approve the legalization of sports gambling, then apparently that stock is going to get cratered. It's going to hurt. It's going to crash. It's going to plummet because those are doors that's locked from them gaining more revenue. They really need to go into these particular states and begin to lobby their government and say, look, have y'all guys thought about trying to legalize sports gaming? Have you guys even realized that you could tax that and how much money that you can bring into the state? Like, I don't know if they got lobbyers at these states trying to, throw a couple of dollars in these government officials' pockets so that they can eventually legalize sports gambling. But that's what they need to do, because if that don't happen, that's one of the risks that this article is already trying to tell you. Lower growth in existing states, more people don't bet, and a decline in the market share for the company, i.e. more competition coming in. So these are the three things. And even one of these three things can really hurt the price target that Ben Miller has of $60. Just one of them not happening or occurring will impact that stock price. So We did a price prediction right here in DraftKings on the 14th of March. Here it is. It came and hit our target on the 21st of 13.72%. And it wasn't even that far from there that you guys can see what happened into the market. Once we hit this sell zone, price immediately came down. So this is a valid sell zone right there. Okay. Now, one of the biggest things I want to show you is that that may be the top. Now, why would I say that? Because there's something that is really pointing out at me that is telling me that something changed. This massive move to the upside in DraftKings, right? How many times can you see the volume spikes that hit the market? Zoom it out, right? You got a couple of times that these volume spikes really stand out. One right here on the 27th. You have another one here on the 15th of April, 16th of February. I'm sorry. Another one here on 3rd of November, 2023. Now, these spikes here, this one and these were opportunities that the market reflected that the market was still bullish, right? This one, though, something changed. Look how wide that spread bar is. Look at where the volatility happened. It happened at that sell zone. So I'm seeing that as a form of weakness. I know you guys don't want to hear that. And then recently, look what happened yesterday. The market in DraftKings ended the day down 6%. Another form of weakness. So just by combining these three things, 1, this price bar, 2, this price bar, and 3, this sell zone staying valid, all lets me know that the current trend into the market in DraftKings is weakness. Here it is on the 2. Take a look at DraftKings on the 3. I don't like that 3-day chart at all. So I see the market trying to come down to like $40, initially trying to find these buyers here at the zone that we already have established. But given how weak the market is on the longer term charts, this is the 5-day, the market may not even hold that area. Here it is on the weekly. We got 8 hours and 30 minutes, and we already have the indicator being triggered. A push to go down trigger on the weekly. So yes, I'm looking forward to come down to like 40 first, but I'm not convinced that that's going to be the bottom yet. There it is on the 2 weeks. Look at that spread. Look at where price currently is closing. Here it is on the 3, the 5, and the monthly time. So from a monthly perspective, let me see. So this may be where the market may want to go before it hits the bottom. Okay, so we're going to draw that trend. Let's draw this trend for DraftKings. Let's do around here. So what we're going to do, we're going to look for price in DraftKings to go down. Okay. And our first target is already here. I would say our first target would be around like 40. That's 3 3/4% there. But then the second target is going to be at this first buy zone, either at the low or the high. That's 7%. Then our second target would be at this trend line right here. I want to see the market bounce off this trend line. If it bounces off this trend line, then the price prediction or the price target that Ben has for Goldman Sachs may still be on the table. But if it doesn't hold this trend, then I don't think the market's going to run 60 yet. Okay. So we just hold those 2 targets there for the moment, because if it gets worse, then we're coming all the way back down to like 35, 32.50, I think. So we'll see. Give me your thoughts. Make sure you maintain the profitability. And as always, trade different.